As we near the end of the Q3 earnings season 2024, one technology company showed us an earnings report on Monday, that is last week Monday, that left the whole market completely blown away. One analyst calls this company the Lionel Messi of artificial intelligence. Some people call this company a generational stock. You want to know about this company. And as you may well know by now, Donald Trump staged an incredible comeback last week. He returned as the 47th president of the United States of America, and he returned with a bang, with expectations. The market expects that he's going to be pro-growth, pro-stock market. And so last week we saw the stock market, the crypto market, all reaching new highs. Is this a flash in the pan? What should you be doing with your money at this time? How should you be investing? More earnings report from one of the leaders in the diabetes and obesity market, speaking of Novo Nordisk. Last week, we also saw earnings report from Moderna, Berkshire Hathaway, Devon Energy, Sunrun, and a couple of other companies that I'm going to talk about today. This and more on this episode of Market Tip. We're back with your every Monday morning show where we give you all the updates on from the Nigerian and global capital markets. And on this special episode, someone else is also staging a comeback. And I guess you need to see her face. She's been off this show for a while, and it's good to have her back.
Thank you, Nathan.
Yeah. So I hope you enjoyed your leave, if I'll call it that.
Yeah. We're back. Yes, yeah. And it's really great to be back.
Yeah, welcome back.
Thank you.
So as I always like to do, before we get into this discussion, I'd like to make this disclosure that this show is for information purpose only. Nothing said on this show should be construed as an investment advice or solicitation to make an investment. Investing comes with risk, and you want to make sure that you are taking into account all the risk that comes with investing. You want to make proper research and get an independent opinion from a professional before you put anything we say on this show to use. So, just to be clear with that. We are here, and Donald Trump is back as the
47th president of the United States.
Yep.
There's been a lot of mixed reactions about his comeback, his political comeback. And, people have a lot of opinions about it. Beyond his stance on the moral decadence, according to him, in the U.S., we have a lot of key policies that he has mentioned time and time again during his campaign. And some of them are policies on personal and corporate tax cuts. We have higher import tariffs on goods from countries like Mexico, China, Europe, countries that U.S. has trade deficits with. Then another key policy he has talked about is the deportation of illegal immigrants. And then he also talked on focusing on America first, meaning the U.S. would participate less in international conflicts like the Russia-Ukraine war and the Middle East war. And then we have the popular slogan, "Drill, baby, drill," which is his focus on bringing back drilling jobs to the U.S. and lowering energy prices. And I think one of the other policies he has mentioned is a clampdown on media sponsorship. So according to him, on his first day in office, he's going to hit the ground running with these key policies and start making some of these changes. Now, a lot of these policies are a a far-fetched from Biden's administration, where Biden's administration stands on, some of these key issues. And these policies have also brought about mixed reaction from every part of the world. There has been a lot of, opinions, a lot of analysis, and, people have been making some, I don't know if to call it forecasts. Is it forecast?
Adjustments.
Adjustments, as you call it. But I think we're going to focus more on the markets, the capital markets. What these policies actually mean for the capital markets.
So I think there's a lot to get around with this whole comeback of Donald Trump. And I think it's, to me, one thing that America has going for them is that they have very strong institutions. And then when the last time Trump was in power, he tried to override some of these institutions. In many areas, he was very unsuccessful with how he tried to go about it. But this time around, he's coming back with that experience. He's coming back knowing what worked the last time and what will not work this time around. So I guess he already has a picture of people he's going to work with. Some he has even made known publicly.
Yeah.
But the whole sentiment around Trump is that he's going to be pro-market. He's going to be pro-growth. He's already said he's going to cut tax rate. So cutting tax rate means that you have more corporate profits for companies, and for individuals, more disposable income. And all of this would lead to higher growth level for America. But on the other hand, you have his talk about raising tariffs for China, Mexico, and some of these European countries. And that is going to lead to a heightened trade war with some of these countries, and it's going to impact the relationship with these countries and possibly stoke inflation. He also talked about increasing America's output. America is has the world's largest oil reserve, including the shale oil, and he's saying they are going to drill. So he's going to shift away from the whole clean energy, the whole renewable energy program of the Biden's administration, which would have impact on different sectors, different specific companies, and possibly lead to higher inflation, because they called it the Inflation Reduction Act. So all of these energy policies should lead to, if reversed, would lead to higher inflation, which would be a problem. But by and large, we expect a stronger dollar, and a stronger dollar is good for America, but bad for many
countries like Nigeria.
Yeah, of course, countries like Nigeria.
Sure.
Europe too is bad for Europe. A stronger dollar is bad for Europe. So in terms of regions, countries that may benefit, I think what we've seen with America is this sort of bilateral relationship with many countries. I think for Trump, people expect him to be very transactional.
Yes.
Like, what are you bringing to the table?
Yeah.
Before so you're going to look at America paying more attention to countries that have high growth prospect, and strategic countries. An example would be India. India, to me, if you want to invest in emerging market, for instance, India is one country that you need to be looking at, because India has a population, and America has always seen India as a country they can use to counter China. So India is of strategic importance to America because they have the world's largest population today. China is the second now to India, and they have that capacity to rival China in the whole Asian market. So in terms of countries that may start to benefit, is countries that have the sort of advantage that India has. But if you're looking at developing countries that requires this constant aid from the United States, I think these countries will now have to look for new partners, because I don't think that Trump is going to be as generous as the Democrats have been. If you recall, the whole idea of this aid to developing countries became more pronounced in America from the Clinton's administration. And the Obama's administration also. I don't think it's a popular thing with Republicans. So you're going to see some of these countries start to struggle, especially developing countries that probably America would not, doesn't see any prospect in. So it's going to be, what I bring into the table. If they see prospect in you, why not?
Yeah, so very transactional. It's going to be transactional.
Yeah, so it comes down to...
You give to take.
Yeah, you give to take.
Yeah, so I mean, the stock market, the US stock market has been, there's been some activity in the US stock market over the course of, I think through last week, coming into this week, there has been a lot of activity, right? So are there particular sectors that could benefit from his administration? I mean, we've talked about the oil and gas sector.
Yeah.
We are looking at prospects of them, having some sort of activity. They're going to have a lot of activity because of the shifts. Trump's shift from renewable energy to more drilling. So I think that's one of the sectors that could benefit. Are there other sectors you can see that could benefit?
Yeah, I think before I even get into that, I need to re-emphasize something I said last week. I said that elections have short-term impacts on the market, but in the long run, it's fundamentals that matters. So we can sit around and talk about some of these sectors that may benefit in the short term from Trump's policies. But if you're a long-term investor, you want to take this, while taking into account these sectors that could potentially benefit, you must also take into account the long-term prospects of those sectors. So, for instance, if I don't believe that a sector is going to be viable in the next 10 to 20 years, this short-term advantage, if you will, that they have may not be enough to attract me enough to invest in those sectors.
Yes.
But having said that, you have to look at the fact that people expect less regulatory bottlenecks with the Trump's administration. He said he's going to move away from excessive regulation, which a lot of people feel it's hampering the market.
Yeah.
So with less regulations, less stringent regulations, I don't think he's saying there will be no regulations, but it's going to be less stringent compared to the Biden's administration. With that, you expect to have more activities, but particularly mergers and acquisition, which should keep the investment banks very busy. One sector that's underperformed in the last couple of years is the banking sector. The JP Morgans, the Morgan Stanley, Bank of America, they've not done as well. Most of them have underperformed the broad market. But with increased activity, we expect to see more mergers and acquisition, more strategic transactions in that space, and that should lead to more revenue for these investment banks. Then, of course, the fact that Trump has said time and time again that he's going to focus on protecting American industries. So you have to look at like utility companies that before now, the Biden's administration has not protected as much as they expect in terms of allowing imports from China and Mexico and these other countries.
Yeah.
And one example will be Novo Corporation. They face significant competition in terms of steel imports from China, and that company popped last week, and I think it's on their account that Trump's administration will protect them a bit more, so there are opportunities there. And then defense sector. I'm not a big fan of defense, of course.
Because they're dependent on the government?
Yeah, they're dependent on the government, and I'm just not a fan of defense, to be honest, for several reasons which I can't get into now.
Yeah.
But his administration is going to invest more in defense because, of course, with all the tough talk, with all the hardlines that is hardline postures that he's giving, you expect that he's going to get prepared for countries that will probably potentially want to counter him. He's about to maybe change the world order, and you have to be ready for what comes with that. So defense stocks may be a big deal, for the this administration. And then on the flip side, we already alluded to it, the reversal of the whole clean energy investment of the Biden's administration. Billions of dollars has gone into, I think over 300 and something billion dollars has been invested in renewable energy under the Biden's administration, and I think he called it a green scam, something like that. Said it's a green scam, so he's going to roll back on most of those investments, or at least revise them. So I'm curious to see what happens with these green energy stocks, whether it's solar, wind power, nuclear power, and all of that, and even the semiconductor industries and EVs. Most of these sectors get a lot of credits from the U.S. government, and Trump is saying that he wants to roll back on some of those incentives that goes to this sector. So, and if you looked at the market last week, the most EV stocks did not rally as much as the market did. In fact, the renewable energy stocks, most of them went down last week. I think it's all in the whole Trump trade thing.
His body, Elon Musk, won't like that part. But if we bring it to Nigeria, right, a lot of people have been asking how will some of these policies affect Nigeria. Now, I think if you look at the Nigerian markets, in as much as there is a cordial relationship with the US, we wouldn't say that Nigeria is a strategic partner when it comes to the relationship with the US. It's cordial, but not strategic, because in the grand scheme of things, sorry to say, Nigeria is not...
I mean, he called the entire Africa shithole country.
Nigeria is not important in the grand scheme of things.
Yeah.
So how do you think some of these policies would affect the Nigerian market? And we're talking about both the debt and the equity market.
I mean, every time you talk about the Nigerian economy, the first thing you talk about is oil, because that is the most important resource and the most important contributor to our revenue. So oil is where you start any conversation around Nigeria.
Yeah.
And you look at the first, I like history, you look at the first coming of Donald Trump. Between 2017 and 2021, when he left. Of course, we know 2020 COVID happened and oil prices crashed tremendously. But if you remember, one of the biggest stories of the Buhari's administration, or one of the excuses of that administration, was the fact that for the first term of his administration, oil price was very low compared to the PDP administration. So if you look between 2017 and 2020, the highest point of oil was $74. That's the highest we saw. And it was, I guess, in October 2018. After October 2018, oil price stayed mostly below $70 between 2018 and 2020 when Trump left. Now he's coming, saying that he's going to move away from this whole idea of renewable energy, and America is going to drill as much oil as they can.
Yeah.
Now, with America drilling as much oil as they can, you worry about oversupply in the crude oil market. And then you look at geopolitics. Geopolitics is very important when you talk about oil. With the posture that he's not going to get American forces involved in all of these international conflicts, you expect that some of these actors will think going to fight one another, especially in the Middle East. The whole Israel-Iran conflict is predicated on the fact that Israel will always have the support of the United States. And so we expect to see less conflict, less international conflict, especially in the Middle East. And when you have less conflict, it's going to drive down the price of crude oil, except, of course, Iran. I think the first sanction on Iran was during the Trump's administration. So if Trump decides to sanction Iran again, we may see some of that supply leave the market. But I don't think it's enough to cause a serious shortage that could lead to higher prices. So, but all I'm saying is that the optics indicate that we may be back in that era where oil price stays below $70. And currently, the benchmark, the budget benchmark for Nigeria is $75. So with the benchmark at $75, what happens? If we are selling crude at below $70, it will hurt the revenue of the country, which will be bad for the economy. Now, if you look at this chart, between 2017 and 2020, when the last year of Trump, Nigeria struggled mightily. Our GDP, the highest point of our GDP was in 2017, and it was 2.42%, 2% GDP. And then, if you recall, this was coming after a recession in 2015, 2016. Nigeria had a recession in 2015, 2016, and then recovered slightly in 2017 to 2.4. And then as Trump's policies started to take hold, the growth rate even dropped further to 1.12, and then in 2018, 0.29 in 2019, and back into a recession, slowed down by 4% in 2020. And then when he left, the Biden's administration got better for Nigeria. GDP improved to 5.4 and then dropped slowly down to the current level. This year, we expect that GDP will close at 3. According to IMF forecast, Nigeria GDP is expected to close at 2.9%. Same story for the stock market. The stock market performance was positive in 2017 and 2018, 15% in 2017 and 23.14% in 2018. But in 2019, we saw that profit give up by 23.22% negative and 7.11% negative. And then the market started to recover again under the Biden's administration. The stock market did 6.7 in 2021 and 19.8 in 2022, and then 45.89 in 2023. This year, year to date, the market so far has done 30%. So if you look at these figures, it does appear as if the Trump era was bad for the economy, and we saw a lot of improvement on that under the Biden's administration. And then you look at some of these factors that I've alluded to, the likelihood that crude oil price would not be at the level we're seeing currently, could potentially come below $70, which is below the Nigerians' budget estimate of $75. And then you also look at his policy on immigration. It's likely to affect Nigeria too, because Nigeria as a country depends on diaspora remittance. We depend a lot on that, especially with what the CBN is doing to stabilize the exchange rate. Diaspora remittance has would likely drop if Trump carries out some of these policies around immigration, and then it affects us negatively. And under Trump, you look at the foreign direct investment to Africa actually dropped under Donald Trump from 50 billion to, in 2017 when he came in, to 43 billion in 2020, his last year in office. So all of this, to me, doesn't bode very well for Nigeria, so especially the stock market. And on the fixed income side, he's saying that he's going to keep interest rates very low, despite the fact that his tariff policy is likely to stoke inflation. We'll see how he's able to do that. But if he succeeds in keeping interest rate low, maybe we're going to see more FPI, foreign portfolio investments, come into Nigeria. and that is if our rate remains high.
High here.
Yeah, so it's a scenario that we'll see how it evolves over time.
With all this information, is it not ironic that a lot of Nigerians or some Nigerians are excited about Trump coming into power? We've been seeing it on WhatsApp statuses, on people have been putting it out there, celebrating with Trump. Now, it's not ironic that Nigeria is probably going to suffer under Trump, and people are celebrating his coming into office?
It depends on what you are looking at, really. Because Nigerians are very religious, and Nigerians
morals.
Yeah, morals. So we have a very high premium on those things. So for Nigerians, what they see is a man who is coming to reinforce certain religious and moral views that we have. And I'm not saying it's a bad thing.
Yeah.
I'm not saying it's a bad thing. But it's just that beyond all of those excitements around his religious rhetorics and moral rhetorics, there are issues that would confront Nigeria beyond all of those as far as the Trump's administration is concerned.
Yeah.
And how successful he is. Because, Nigeria is facing those same issues, whether you're talking about moral issues, religious issues. Nigeria is facing the same issues. But nobody is saying, give us the right to freely express whether I want to say, I can change my gender tomorrow.
Yeah.
I'm not coming out to... There are a lot of Nigerians that have certain sexual orientations.
Yes.
But they are not demanding for the right. I think that is the difference between a country like Nigeria and America. We face the same issues that America faces, but of course, we don't think our own issue. We don't think our issues are pressing enough because people are not yet demanding for the right to be respected as far as their preferences are concerned. So, if for Nigerians, we should worry a lot about our own issues.
Exactly.
The real issues facing us: security, economic issues. For instance, you don't know when you're going to lose power in your home, your office.
The national grid has been collapsing.
Yeah. So.
True. So I think to round it off, I think Nigerians need to get comfortable with numbers, the numbers that affect us. Yeah. Go beyond, my opinion though, we need to go beyond like you said, it's not like the religious and the moral stances, they are not great, but we need to go beyond that and start looking at the numbers that affect us as a country.
Yeah.
Now, when we talk about numbers, you were saying at the beginning, you were talking about earnings reports, some companies that have published their Q3 earnings reports. So the market has been busy for the past 1 month, give or take. The market has been really busy with earnings reports here and there. Now for last week, we had companies like Palantir that you said is what was your quote?
So there's this analyst, Dan Ives, that calls Palantir the Lionel Messi of artificial intelligence.
Okay. We have Palantir, reports from Palantir. We have from Datadog, Devon Energy. We also have from Berkshire Hathaway, Sunrun. I don't know if I'm missing anyone. We have from
Novo Nordisk.
Yeah, Novo Nordisk. And
Moderna.
We also have from Moderna. So we have a lot of them. So we're just going to, touch on them here and there.
Yeah.
Yeah. So we'll start from, seems like it's your new favorite, Palantir.
which is my first favorite.
NVIDIA.
Oh.
Okay. So their performance or their reports showed that their US revenue grew by 44% year over year and 14% compared to the previous quarter, that's Q2. Mm-hmm. And if we look at their commercial revenue, it grew by 54% year over year and 13% to $179 million, and their US government revenue also grew by 40% year over year. Now that's a very impressive result. But here is what is very obvious when you look at their reports, is that they have a lot of dependence on the government. A lot of their revenue, we have 320 out of the $499 million revenue, we have 320 coming from government, the US government. Now that's a lot of dependence on the government. How do you think this would affect them? I mean, given that we're looking at a change in administration, how do you think this change in administration would affect their government revenue? And also, how can do you see them scaling up their commercial revenue? Because that's very important. You have to be able to depend on the masses. In case of, policy changes, you have to be able to depend on the masses to generate your revenue.
The commercial market.
Exactly. Yeah. So, what gives?
Yeah, I think to me, they have a very good problem. I mean, if I have a business and I have one customer that is giving me a lot of money, I mean, it's a good problem to have. I'm going to take that money any day,
okay,
and then use that money to accelerate my market share, basically. So to me, it's a very good problem that they have. And if you think about, I'm not worried about Donald Trump coming to power. Palantir has always had this government contract. I mean, dating back to, I guess, 2008 or thereabout. They've always had this government contracts, and they had it during the first coming of Donald Trump, and I think they're one of the firms, in my opinion, that are positioned to benefit significantly from this administration. The simple reason is that they have a product that no one has, at least at the moment. So when you talk about artificial intelligence, all we've discussed, you mentioned NVIDIA. What does NVIDIA do? NVIDIA provides the picks and shovels for artificial intelligence. They are building the hardware and all of that. Little conversation is had around the application of AI. When you build all these models, deploy all these models to firms, how do the firms use it to improve their process? How do they use it to make decisions? And this is where Palantir is providing leadership. They're about the only company I know that is deepening the application of AI at the scale at which they are doing it. And what they have is very useful for governments. Just imagine a platform where if you want to get a visa today, what do? You go to the embassy and they interview you and ask you your age, where you work, and all of that. Now, when you apply for visas today, they ask for your social media handles. Someone is supposed to go look at all your social media pages to see the views you have shared in the past, isn't it? But now, Palantir has an application that can take you, and the software would analyze all your social media handles for the embassy officials.
Yeah.
Analyze every information about you that exists and use that to make actionable decisions on behalf of the embassy.
Yeah.
So they're going to take all of this information around you that are publicly available, analyze those information, and then come up with outcomes. Like, this person shared this sort of views and we consider that it's harmless or could potentially be a threat. And so they started with government because government had the kind of money, because their softwares are very expensive. I think on the average, the cost of their software is around $2 million. So not everybody could afford it. Yeah. I guess they had to go with government because government is the only guy that would spend on security without looking at the economics of the cost. So I think that it was right for them to go with government first, and now they are translating that into the commercial segment, and where, I mean, if you look at the report, this quarter alone they closed 104 deals, valued at $1 million each. And for me, that is significant.
Yeah.
Their customer count has gone up to 629 customers, which was a significant improvement. I think about 77% improvement from last year. So the company is growing at a very high pace. And I think the game changer for them is their AIP, their artificial intelligence platform, which they have deployed for a lot of sectors, different diverse sectors in the US and internationally. And I mean, with great testimonies from the user. In fact, in the words of the CEO, Alex Karp, he said they had such a tremendous quarter that he felt like, if I said, let's go home, it was that sort of performance.
Yeah.
So their revenue is growing, they are gaining market share, and the conversion rate is very high. The application is across industries. Healthcare, imagine you go to a hospital and the hospital has a software that can quickly analyze all your medical records. You know how long it would take a doctor to look for your records, look at them, probably call his colleagues. So this software can potentially look at all your medical records. I think on the call they also spoke about the application in insurance. That's for underwriting.
Yeah.
So the software can help them underwrite faster by looking at all the risk and that comes with manufacturing. So what they are doing is to build a software that applies artificial intelligence and customize it to a different sector. Because you look at ChatGPT today, ChatGPT is not focused on any sector.
Yes.
Anyone can go to ChatGPT. It gives you the same sort of response, irrespective of where you're coming from. In fact, this day, if you get a document from ChatGPT, people can easily tell this is from ChatGPT. So what they are doing is to customize for different industries. Mm-hmm. So I think they're in a good position. Palantir is an excellent company. They're in a good position, and they're in that position where they can scale. But they are not going to scale the way a lot of us expect.
Yeah.
Where it's every company has access to their software. It's about those who can pay, at least for now, because of the size of deployment of their software or the cost.
Yeah, and I think another good thing to look at, which is one of the qualities we look out in stocks, is their free cash flow.
Yeah.
They have a very healthy free cash flow, so
Crazy.
You can afford to play around with money to an extent. So I think one of the questions a lot of people would ask now is, do you think the stock is now overvalued? Because it was a huge rise. It was a drastic rise from where they were.
I mean, 40% last week.
Exactly. So do you think it's now overvalued?
40% for the year to date, to 40%. And so listen, to me, there are a lot of things I'm looking at this company. Palantir is a company that most people, or many of us, do not understand because of the nature of their business. You do not even know who their clients really are. Details of who their clients are. So you get this high-level information about them, but granular details we mostly don't have. And that is because of the peculiarity of the type of business that they do. But a company that is growing at a very healthy pace, just 629 customers in the US, and to me, they're generating a lot of free cash flow and little or no debt. The reason this company is called the Lionel Messi of artificial intelligence is, think of a perfect player that can dribble, score, defend, just do everything on the football pitch.
Yeah.
That is what Palantir is. They are generating cash flow and they are doing it very efficiently. They are despite the tremendous amount of growth that you saw come from them, their operating expenses just grew slightly by, I think, 14% only. So they are scaling, but their cost is not growing at the same pace. At the same pace. So this is a perfect technology company. So you can point to this stock and say they're overvalued, but what I'm looking at is a growth opportunity. And to me, if I love this company enough, I think the stock is nearing $60 at the moment. And this company became profitable just last year. Yeah. Last year it was trading around $9. Today it's around $60. If I love it so much that I'll buy at $60. And watch what happens. If it comes down, I average down. But this is a name that you want to stay in.
Yeah. So if we look at, I think another company that published their reports in the biotechnology sector is Novo Nordisk. And if we look at their performance highlights, they had a net sale of 204 DKK million. Now, for context, DKK is Danish krone, and 1 Danish krone is equivalent to 0.14 United States dollars. Now, their sale went up 23% year over year, and it was driven mainly by a 26% sales growth of Ozempic. Ozempic is their diabetes drug, GLP-1 diabetes drug, and it was also driven by 44% sales growth of Wegovy. Wegovy is their weight loss injectable medication. Now, I know a lot of the issues, some of the issues they had some supply issues last quarter. So there was, there were drug shortages across several geographical areas, and, across some of their products too, there were some supply issues and drug shortages. So they revised their 2024 sales growth outlook from 22 to 28% to 23 to 27%. Now, my question is this, right? Do you think that their sales outlook is achievable, given that they also have a very strong competition from Eli Lilly when it comes to, especially when it comes to the diabetes and weight loss, which is one of their, those two areas are some of their major strong points?
I think Novo Nordisk is the architect of their own problem, because the issue they have is not demand. The demand is there.
True.
They have the demand. Wegovy, their weight loss drug, is one of the bestseller globally. It's about the bestseller globally. They control about, when you look at the diabetes and obesity market, they control over 50% of that market globally. And that is tremendous. The problem they have is that they do not have enough capacity to meet that demand.
Yeah.
And so what are they doing? They are investing in the capacity to meet the demand. I think they're also looking at acquiring a manufacturing plant, which is why their free cash flow declined slightly. I think it declined to 71 million Danish kroner for the quarter. So I think it's a problem that they are working around.
Yeah.
They're working around that issue. And although the danger is that if they don't do this fast enough, competitors will still swoop in and take those market shares away from them. So this is another stock that I like a lot, just because I like dominant stocks, companies that dominate their sector, and these guys have three, the GLP-1 treatments, the Ozempic, Wegovy, and Rybelsus, that also has significant market share in the US and internationally. I think their market share has increased in the diabetes market to 18%. So this company has, they have a good problem, and all they need is to do it fast in terms of increasing their capacity. And the current level provides opportunity for investors. If you look at the performance year to date, it's grossly underperformed the S&P 500. Year to date, they've done 3.62%. But they have an excellent PE ratio. Their PE ratio is at 35. The trailing 12 months PE is at 35, and the forward PE is at 33. So it's an excellent stock. I believe in this stock, and I believe they're going to improve their capacity and stay in that pole position, that leadership position in their market.
Yeah.
Alongside Eli Lilly. I think both guys are dominating that sector.
That sector, true.
And I think it's going to...
And the sector is wide.
Yeah, it's been that
a
for a long
sector.
time.
Yeah.
I mean, there are a lot of obese people who want treatment. And then the good thing again is that they found out that some of these drugs could also, for instance, slow down the progression of Alzheimer's disease in older patients. Some of them also address cardiovascular diseases. Which should contribute to the acceleration of their market. So the problem they have is capacity. Just show up your capacity.
Yeah.
Yep.
Another biotech we can look at is Moderna. Now, of course, Moderna is known for their COVID and respiratory vaccines.
Yeah.
Now, over the past, how many years? Over the past 1 year, 1 to 2 years, they've seen a rapid decline in their COVID business. And part of this reason is, of course, we know a lot of people. Now, you mentioned COVID and, people just, played away. But it was a serious thing in 2020, 2021. Now, when you look at their performance highlights, they had a revenue of $1.86 billion, and it beat analyst expectations by 48%. Now, if we look at their Q3 reports, we'll see that there was a focus on the execution of the launch of their updated COVID-19 and RSV vaccines in markets across the globe. But beyond that, there was also a focus on cost efficiency.
RSV, is that the respiratory vaccine?
Yes, okay. That's their respiratory vaccine. So there was a general focus on cost efficiency. In September, they announced a plan to cut their R&D budget by $1.1 billion over the next 3 years. So you could say that what they've been focusing on is cutting costs to be able to meet up. Now, if we look at their year-to-date performance, we'll see that they are down 52.91%. Now, my question is, do you think...
Down for a reason.
Yes. So do you think this focus on cutting cost efficiency is enough to give them some sort of comeback?
I mean, when I look at Moderna, all I see is vaccine. And, how many
times can you really take vaccine?
I mean, the guy who is coming in as the president alongside the guy who potentially could play some role in the health sector.
Yeah.
JFK Jr.
Yes.
These guys are not the biggest fan of vaccines.
Yeah.
So that's a downside for Moderna. But by and large, even in that market, they are starting to lose market share. They used to account for 45% of the COVID vaccine in the US, but that has come down to 40% market share. So there's a lot of struggle in that space. So despite the fact that they outperformed estimate their issues, I think their product pipeline needs to expand.
True. Yes.
Cost cutting to me is not. For Moderna, it's about revenue. The revenue is not at the level where you want it to be. So cost cutting is a secondary measure. Of course, if you're not growing your revenue as much as you want to cut cost. It's a secondary measure. But to me, the primary issue is they need to expand their product pipeline. All I see is vaccines. We've moved significantly away from COVID, except there's a resurgence of the virus. You're not going to see massive sales in that. And then you're now coming into an era where it's going to be maybe more difficult to get FDA approvals for these vaccines. I think they have a couple of vaccines in their pipeline currently. So you want to see how... So I think to me, they need to focus on other areas. Like I think they have programs for cardiovascular disease, renal disease, and stuff like that.
Yes.
I think they need to invest more in those areas if they want to stay competitive. But what I'm seeing with Moderna, I do not like at the moment. And that's why I say they are down for a reason.
Yeah.
And they are likely to stay down. Until we get a new story.
Yes,
on
true.
this one.
Another company we can look at that also published their Q3 earnings over last week was Berkshire Hathaway. Their performance showed a net earnings of $26.3 billion, which is really good compared to the same quarter last year, which was a loss of $12.8 billion. Now, despite this really good performance when it comes to their net earnings, we can see that their operating earnings declined by 6%, which better reflects the company's earning power. Now, apart from that, there was also a significant sales from their portfolio. They had a majority sales of the Apple from their investment portfolio. I think currently their Apple stake is at 300 million shares.
Mm-hmm.
Yeah. And I think they also sold Bank of America. They sold off about $10 million of their Bank American shares. And if we look at their report too, we can see that they now sit on a lot of cash.
325 billion.
Exactly. So their cash increased from 28% to about 49%. And when it comes to the cash, do you think this is redundant, sitting on that much cash? Do you think it's redundant? And I mean, considering all of this, would you buy Berkshire now?
I mean, a lot you've said.
Yeah.
But, to take this one after the other, the decline in their
operating earnings,
6%, is coming primarily from the fact that they had to, pay out a lot of claims, over $500 million in claims as a result of the hurricane in Florida.
Yeah.
The Hurricane Helena. They underwrote a lot of policies there, which kind of hurt them. But the major thing I see with this report is the fact that earnings has not grown significantly. They've struggled with the insurance sector.
Yes.
I think the insurance sector finally grew by 7%. We saw growth in their major insurance business, GEICO.
Yeah, GEICO.
Yeah, we saw a growth in that sector. But their railroad and energy, that sector revenue still declined. So for their for the sales you talked about, I mean, they've cut down the position in Apple significantly. So I think it's a mix of two things. If you ask Warren Buffett, he will say he's doing that for tax purposes because they've had this position for a long time.
Yeah.
For so long, Apple was 50%, close to
over 50% of their portfolio,
of their investment portfolio.
Yeah.
Now they are trimming that position, and they've made a lot of capital gains in that position.
Yeah.
So to him, he's making these sales to avoid more capital gains. Potentially, if the rules around capital gain, he expects that the tax rate on capital gains would increase in future, and he's making these sales in advance. But if you know Warren Buffett, he's not a big fan of Apple. So in the first place, having 50% of Apple in his portfolio was a surprise for many people. So what we're seeing now to me, is a mixture of two things. It's trimming that position because, again, to me, I think Apple has gotten to the peak of its growth. It's got to a very mature level that you're not going to see tremendous upside from where we are today. Then in terms of their cash position, which is well over $325 billion, to many people you say it's redundant. To me, I wouldn't hold that amount of cash, but I'm not Warren Buffett. He was the richest man in the world at some point for a reason.
Yeah, he was doing something right.
Yeah, he's a very disciplined investor.
Yeah. I'm
very sure that they are positioning for a major transaction. So it could be several reasons. He's an astute investor. He's a smart guy. He's brilliant. He's intelligent. Has he lost some of those touch? I doubt. So.
Will you buy?
Well, at this point, I mean, it depends on who I am. If you're talking about me, I own Berkshire, the Class B, of course. If I had Class A, I'll probably not be sitting here with you. I have the Class B.
Yeah.
And at this point, I'm not I may not be keen on buying more. Yeah, I may not be keen on buying more, but that is because I see other opportunities for higher growth. But if you are an investor who wants stability, who wants a company that is less volatile than some of these other names, then you could look at Berkshire. But this company has an excellent management team. He has some of the most brilliant guys you can trust your money with. So for me, it's for a conservative investor. This is a stock that you want to look at, and the performance really has been great. I'm not saying that both the Class A and Class B has outperformed the S&P 500 year to date. So this company is a great buy. Any day, anytime. And then so I think we need to go to e-commerce. So I have this
MercadoLibre.
Yeah. So this company is like a fusion of Amazon and PayPal. Like they have the e-commerce business, and they also have the payment platform. So it's a combination of e-commerce and payment platform. And the exciting thing about this company is really their market position. It's the biggest e-commerce firm in South America with strong presence in Brazil, Mexico, and Argentina. And for this quarter, the EPS underperformed actually by 21.15%. EPS was 7.83% compared to 9.93 estimated. Revenue was fairly in line with estimates. Their revenue came at 5.31 billion compared to 5.28 billion. And the market was not having any of these reports. The market did not like this report one bit. Immediately after the report came out, the stock dropped about 17% for the day. And for the week, it closed at 9% negative. But to me, this is an excellent company, very excellent company. They have over 218 million active users and over 1 million active sellers on their platform. And this company operates in a market where you potentially have access to close to 500 million customers, 500 million users. So they have a tremendous opportunity. Revenue growth is expected to escalate. And part of the reason the EPS dropped actually was the investment in 6 additional fulfillment centers, they call it, 5 in Brazil and 1 in Mexico. And of course, they operate in Argentina. Argentina has been facing issues with inflation. Inflation rate in Argentina has been skyrocketing. Currency instability in Argentina, much like what we are seeing in Nigeria. These are the headwinds that are plaguing MercadoLibre. And I think for me, they are growing at a very good pace. The revenue in Brazil grew by 41.26%. Mexico revenue grew by 44.65%. Argentina grew by 13.19%. And fintech revenue, talking of their payment system, grew by 20.56%. So this is a company growing at a very high clip. And the forward price to earnings ratio is 55.93. And anytime you see a high growth company like this, like MercadoLibre, that has potential to this tremendous market size, then it is a company that is worth looking at. Year to date, the company has actually underperformed the S&P 500. Year to date is up 19.13%. And what I see with the current price level is opportunity. You look at the share price, the 52 weeks range, high and low, is between $2,161 and $1,324. So at this level, any pullback in a stock like this, to me, is a buy opportunity. And I'll buy this if I had the chance. I don't own this company, but if I have the chance. Maybe if it pulls back a bit more,
Yeah.
I'll buy. But to me, it's a buy for a long-term investor.
Okay.
Yep.
Now,
So what next?
The solar energy industry.
Okay.
Yeah, so we can look at Sunrun. Sunrun is one of the companies that published their Q3 report last week, and they play in the solar energy industry, which is, as we know, an emerging market. Now, if we look at their performance, their revenue missed analyst estimates or expectations by 4.9%. And their earnings per share, their EPS, also missed analyst expectations by 68%. If we look at their performance year to date, their shares are down 47.89%. And their free cash flow is at negative $3.189 billion. Now, it seems like it's all bad news for Sunrun. Mm-hmm. And we can also, if we look at Trump's impacts or, what we expect of Trump, we're also seeing a return. We would see a return to old school fossil fuel exploitation. Now, you've always been a believer in clean energy stocks. Mm-hmm. With all the data around Sunrun now, do you still believe in this one?
Well, I think this is a tough one because you're looking at two stories with Sunrun. You are looking, on one hand, you're looking at this company and you're asking, when are you going to show us some profit?
Yep, the market has been waiting.
When are we going to see profit? And then you look at the other side, you see a company that controls 50% of the residential solar market in the US, which is massive. You see a company that has 1 million customers in the US. You see a company that it's growing and investing and expanding capacity in the solar energy market. So there are positives for this company, and you want to be excited about the future. That beyond all of this, beyond the level of cash burn we are seeing with them, at some point this company will turn profitable. We expect artificial intelligence to stoke demand for energy, and some of the alternatives that we're looking at today is solar power, nuclear power, wind power, and all of that. But on the other hand, you're looking at all of these issues. The company, the loss would have been a lot worse than what you're seeing, save for a 37.22 million incentive credit that they got, which is kind of bootstrapping their earnings. So it puts you at that crossroad where you're thinking about what to do, and then Trump walks in and says,
we're going old school.
All the investment in alternative or renewable energy is a green scam. And then he wants to roll back on all of this, including the incentives we are seeing.
Yes.
Those incentives can be potentially rolled back. So for me, Sunrun is that stock where you want to take a step back and look at the company again.
So hold, sell, average down. What should people do at this point?
Anyway, it depends. To me, it depends on it's a very small position in my portfolio, so I'll definitely hold. I'm definitely not selling. And the other thing you learn when it comes to investing is to not throw money at bad. So there could be some argument for averaging down, but I'll be careful throwing money at this stock at this point in the name of averaging down. I'll be careful with that. So I think it's for me at this moment is a hold. I want to see what happens with Trump. I want to see the policy direction as it relates to artificial intelligence, and then from there we'll take a decision. So, but for now, it's a hold.
Yeah. Mm-hmm. Now, on the flip side, we have Devon Energy, which some people would say is poised to benefit from Trump's, return to old school fossil fuel exploitation. Now, if you look at their performance highlights, their revenue and EPS beat analyst expectations by 13.24% and 19.09% respectively. Irrespective of that, they've been down 14.08% year to date. Now, I think what I wonder is, do we think that Trump's bullish stance on oil drilling and production will put them at an advantage where we'll see some sort of turnaround with their stock performance?
Yeah, I think this company particularly is already seeing an improvement in their oil production. For the quarter, they averaged 728,000 barrels per day, which surpassed even their own estimates. And for next year, they are guiding that their production will come to 800,000 barrels per day by next year, 2025. So I think the company has been improving production, and that comes from the sort of investment they have made in technology, more efficient drilling technologies. And my attraction to this company initially was the fact that they were already thinking in the line of investing in renewable energy, but maybe with the coming of Trump, they're going to focus at the moment, maybe in the next 4 years, they're going to focus a bit more on drilling.
Yeah. And
they also made a very strategic acquisition that would likely improve their capacity going into next year. So they acquired a company called Grayson Mill, which should enhance their position as one of the leading oil producers in the United States. And the other good thing I like about this company is the fact that they are generating a ton of cash. They're generating massive free cash flow. For the quarter alone, they generated $786 million in free cash flow. And so if you look at Devon, they've been consistent with share buybacks, dividend payments. The dividend yield is above the market average, really, for Devon Energy. So that is the good part. But of course, you cannot talk about the oil industry. Even with all the rhetorics of Trump, you can't speak of the oil industry without talking about the volatility of that market.
Yeah.
Oil depends on what happens in the Middle East. Geopolitics has an impact on oil price. Even recession, economic activity has impact on oil price. If there's a recession, demand for oil will typically drop. Even weather affects oil. So it's a volatile stock.
Yeah.
But the good thing about Devon Energy is the ability to generate a lot of cash, and the fact that they're investing in more efficient drilling technologies. In fact, I think they also have investment in what they call carbon capture, which is reducing the impact of their exploration activity. So I think it's a company that is preparing for whatever outcome you see. Is it a Trump that is dialing back on the renewable energy investment, or is it a world where we're all pro renewable energy? I think it's a firm that is staying ready. But of course, it comes with the instability of the global oil sector.
Yeah. We can't forget Datadog.
Yep. I guess that is the last one.
Yes. Datadog released their Q3 report, showed a revenue of $690 million, which of course exceeded analyst estimates by about 3.92%. Now, I think I'm more interested in their year-to-date performance. I think their year-to-date is currently at 2.47%. Now, if we compare that to NASDAQ, which tracks technology stocks, NASDAQ has a year-to-date performance of 28.48%. Now, why do you think that there is this disparity between the performance of Datadog and NASDAQ?
I think it's the whole AI expectation. The whole story around AI came with a lot of expectation, and you can look at Palantir and the fact that they have consistently surpassed those expectations.
Yeah.
So it's an expectation thing. It's a game of expectations. Some of these other firms have not been as efficient as companies like Palantir. So if you look at their revenue growth between 2023 and 2024, the revenue grew by 26%. However, the cost of revenue grew by 33.33%. Operating expenses grew by 18.63%. So it kind of mutes some of those expectations for a very high and efficient level of growth for Datadog. But on the flip side, the company has seen improvement. Their customer count has been increasing. They have approximately 29,200 customers, up from 26,800 about a year ago. The free cash flow is at 204 million, which is a free cash flow margin of 30%. So the company is executing well, and for me, it's a company is an investment for the long term. Because of their unique product line. So they have this platform that can ingest a large amount of data and help companies analyze and evaluate the adequacy of their IT infrastructure, which is also a key need area. In fact, one of the stories around Trump is that with the coming of Trump, companies are going to face more threats, cyber threats. So you're looking at companies like this that can help you stay ready, whether it's in analyzing your IT infrastructure or actually warding off these threats, or even making you anticipate those threats. So if you're looking at anticipation, to me, you're looking at the likes of Palantir that can help you analyze and anticipate. If you're looking at the warding off, you're looking at the cybersecurity firms, the Cloudflares, the Palo Altos of this world. Yeah. And then you're looking at those that can help you look at adequacy of your IT infrastructure. You're looking at Datadog. So it has a unique proposition, and for me, it's for the long term.
So we should expect to see some growth in that in the company.
Most definitely. And then what do we have ahead next week? Now that we just managed to get to the end.
I think we've seen we've seen the most of it in terms of the Q3 earnings reports. For this week, we have Home Depot, we have Occidental Petroleum and Lithium Americas Corporation. Those are some of the earnings reports that we should see coming out this week.
Home Depot is actually an interesting company. And then Occidental Energy, Warren Buffett bought a lot of this company.
Exactly,
has been buying a lot of it for the last 2 years or so. Or is it from last year? I think I started hearing that from last
Occidental.
year. And then I think we have a report from Aradel.
Yes, Aradel.
That recently got listed on the stock exchange. And I did promise we're going to dig deep into
Yes.
Yeah. Anyway, welcome back to the show, and I hope you grace us with your presence a lot more.
That's the plan.
All right. And thank you guys for staying with us. It's important that you let us know if you enjoyed this show. Your comments are very important to us, and let us know the things you would want us to talk about a lot more. Until next time.
Also, don't forget to like, subscribe, and share. Also, hit the notification button so you can be informed when we drop any new episode. Until next time, see ya.
Join the movement.